Good morning. It's the Morning Mastery with Spencer Caldwell. How's everyone doing today? It's Wednesday. We made it halfway through the week. Super exciting. Just as a reminder, I do the show every single morning at 8:30 on the dot. We bring on guests. I might do something super wild on Friday and actually not have a guest, and probably just open up questions to any callers. So you can ask me any random questions about real estate or life. So I am super thankful today to have Bridget on the line. We're going to talk 1031 exchanges. So some of you may be a pro listening today about 1031 exchanges, and some of you might be wondering what the heck is a 1031 exchange. So we're going to go from A to Z on 1031 exchange. We got 15 minutes to cover it. Bridget is the absolute pro. She's been doing this for 30-something years. She probably didn't want to show her age too much. It might be closer to 40 years if she said 30-something, right? When we're doing something that long, we don't want to say 40, right? How many years? You didn't really want to show your age too much, I think, maybe, Bridget. That's awesome. So she is with the easiest to memorize name of 1031. It's called the 1031 Exchange Company. And she is originally from Boston and has been in Arizona ever since she was 13 or 14 years old. So she's basically from Arizona. So being from Boston, let's talk about that a little bit. I've got friends that love the Boston Marathon. Have you ever been back there for the Boston Marathon?
I have not been back there for the Boston Marathon. I generally will visit my sister who is located in Wolfboro, New Hampshire, and occasionally we might fly into Boston to see the sights, but I haven't really been to Boston since we left.
All right. No, that's good. I haven't spent much time in Boston myself. I've got some running buddies, and I swear I hear about the Boston Marathon at least once a month as far as people running it, this and that. So anyways, Bridget, being the Morning Mastery, the Spencer Caldwell Morning Mastery show, as far as doing 1031 exchanges, which is like one industry for 30-something years, how do you mentally and physically handle waking up every single morning and handling the same job and accomplishing? It must be kind of an exciting thing if you've been doing it 30-something years. What's the secret to your success there?
Every transaction is different and every client is different. So it really is a variable that happens every day. Something new comes across the desk every day that keeps it interesting and moving. And real estate, it's moving. And at a rapid pace, we're helping clients get the deferment that they're looking for and strategizing with them. So every day is different. So it's not a mundane job by any means. Okay, great.
So you mentioned a word that maybe a lot don't understand. You said get the deferment they're looking for. So the 1031 exchanges, let's start at the beginning. What is a 1031 exchange?
A 1031 exchange is a transaction in which a seller who is selling real property wants to defer the capital gain taxes that might be associated with the sale of that real property. So you buy a property at XYZ value, and of course, real estate tends to grow in value. That growth in value comes with a tax consequence when you sell the property. So the government says, well, there's this vehicle you can use, the 1031 exchange, whereby you defer the tax you otherwise would have paid. If you'd just done a sale on the property, you pay the capital gain tax. By doing an exchange, you defer the capital gain taxes. So you're putting off that tax until a later date. That later date might mean that you move into the property. Will you pay the tax then? No. Well, then when will you pay the tax? If you ever sell that property that you have done a 1031 on, you will pay the taxes that you had deferred on that transaction.
Okay, cool. So that helps me understand and kind of get this vehicle going of 1031 exchanges. So if I buy a property in Arizona for $200,000, and thankfully it now increased $400,000, and just speaking whole numbers, so now I go to sell that house for $400,000, and I probably only owe now. I had the property saved for 20 years, 15 years, so now I only owe $100,000. So I have a $300,000 capital gain if I just sell that property, $300,000 worth of capital gains that I have to pay taxes on, correct, Bridget?
Well, if you had a base of 200,000, meaning you bought it at 200,000 and you sell it for 400,000, you generally will have a gain of 200. So that would then be the taxable transaction. You would pay tax on the 200,000. You get to reduce that 200,000 by commissions, title, and escrow fees, but essentially it's that 200,000. And with an improved property that you're selling, you also have something called depreciation. So really, is it 200,000? No. By the time you add in the depreciation that you've taken on the property, it's a write-off you get against a real estate transaction every year so that you pay less in taxes on the income you produce. So that's called depreciation. You're going to have that depreciation, which reduces that basis. So you might have bought the property at 200,000, but you wrote off depreciation, let's just say, of 50,000. So your base is really 150.
Got it. Okay, that's great. So there's a lot of things she just threw in there, guys. So let's just kind of recap that real quick. So if I bought it at 200,000, I only owe 100,000. I sold it, I made $300,000. I'm not going to be taxed on that $300,000. I'm only taxed on the gain, which was $200,000, because I paid down my mortgage $100,000, right? And so that being said, I also over time depreciated the property out roughly, and perhaps property improvements. So I depreciate another $50,000, correct? So my true gain's only $150,000, correct, Bridget?
Well, the 150,000 reduces your basis, so that increases your gain. So that 200,000 gain you thought you had is really 250,000 gain.
Okay, that makes sense.
It increases your basis. It increases your gain. Decreases your basis. The 50,000 decreases your basis. So you thought you had a basis of 200,000, but you had a $50,000 depreciation. So now your 200,000 reduces to 150. So
got it.
Your capital increases, and your gain is on the 250,000.
Awesome. Okay, got it. So it makes sense. Sorry, we're throwing a lot of numbers out there. So let's just say I have to pay on my gain of $150,000. I mean, or whatever the gain is in your scenario of selling your property. Roughly, how much am I going to owe in taxes on that gain that I have to pay?
The first $50,000, because that's the depreciation, will be taxed at 25% depreciation recap rates.
Got it. Okay.
And then the balance gain will be taxed at your cap gain rate, which can be 15%. It could also be 18.8%.
Right.
20%.
So it can be wherever that is. Okay.
Yeah.
That makes sense. So basically, if I don't want to be taxed on that, we now have an awesome vehicle called a 1031 exchange that we can basically use that money and that profit to buy another piece of real estate, correct, Bridget?
Yeah, that's the beauty. So that money you would have just given to the government because they take it as a capital gain tax. You're no longer giving it to them. You're keeping it, allowing that money to grow for you.
Right. Okay. And so why do I need a 1031 exchange company to do this? Why can't I just get the money and do it myself? Why would I use you?
The government says the minute you take the money from the closing table, you have a taxable event.
So I can't touch the money. It has to go to a third party.
Correct. So we're that party.
So essentially, I'm selling my property, whatever profit I'm making that I'm going to pay taxes on, that gets transferred to you, and you're in possession of it, and then you let me deploy that once I pick another property to put it into, correct?
Correct, yes.
Okay, awesome. And how many days do I have after property A closes and I want to buy property B with these profits? How many days do I have to announce that I'm buying that property B?
You have 45 calendar days from closing of your sale to identify in writing what you want to buy.
45 calendar days. Okay.
Yes.
Okay, got it.
50 days to buy what you identify.
45 days to identify, and you said how many days to close on that property?
You have a total in the process from close of sale to close of buy of 180 days.
Okay.
45, you're going to identify what you want to buy. And after the 45, that leaves you 135 left to buy it.
Okay, that makes sense. So what if I build this awesome real estate portfolio and I leave this portfolio and I've done a lot of 1031 exchanges. I haven't paid hardly any taxes, and I leave that portfolio to my family. I die. I'm dead. I leave that portfolio to my family. My family's like, hey, I'm not in real estate. I don't want to deal with these rentals and sell it. Are they going to have to now pay taxes on it?
Generally, your heirs will receive the property at a stepped-up basis, meaning at the time of your death, the value to them of the property is the value at date of death. So whatever the value of the property was at the time of your death, that's their base. And they only tax from the gain forward of their base. As long as the estate that has been left is not over the current estate threshold, and it's 12-point-something million per person right now.
Okay, sounds good. So if they sell it a couple days after my death, then no, they're good. But if it increases in value, they're going to pay taxes on that difference, right?
Correct.
Okay, cool. You guys, what a great vehicle. Why is it even called a 1031 exchange? What a weird name.
I think that's just the tax code enumeration. As far as in the code, it's 1031.
Yep. Cool. So I personally had a property in Arizona that the numbers are actually probably similar to what we've been discussing, but it had a mortgage on it, and the cash flow was only like $600-700. And I had the opportunity to take the equity out of that property and actually buy a 10-plex in Tennessee, 10 plexes. So I took a single family house. I need to make sure, so we bought a multifamily property, and it increased like the cash flow from like $600 or $700 to like a couple thousand, I think it was closer to $3,000. And so you'd be surprised about some of these properties out there, if you're an investor, that just aren't cash flowing very well, but you still have a lot of equity into them. You could do a 1031 exchange into maybe 2 properties and leverage yourself a little bit more and increase your cash flow. So can you explain a scenario like that would be advantageous for an investor to do a 1031 exchange that you've seen?
Yeah, we've often seen people take one property and buy 2, 3, or 4 properties, thereby leveraging their money out to that many different investment properties in increasing their cash flow. And also, in the longevity of it, you're increasing your gains over multiple types of properties. So you could sell a single-family residence and buy commercial, single-family, or multifamily. You can buy anything in real estate as long as it's an investment property that you're not going to have personal use and enjoyment of. So it really is a broad spectrum of properties, and you can buy them anywhere in the United States. So you could sell here in Arizona, as you indicated, and buy in Tennessee. You're not pigeonholed into one marketplace, which is the beauty of the 1031 exchange.
That is awesome. So you guys, we're wrapping up. We've about covered our 15 minutes. I don't want to take any more time. I want you guys to go out there and have a successful day and go create and go buy real estate so you can gain equity and come back to Bridget and say, hey, I've listened to this call. I found you on YouTube, Spencer, and I want to do a 1031 exchange. That's what I want you guys to do. I want you guys to take action on this principle of 1031 exchange, this law, this rule, this awesome vehicle to not pay taxes when we sell real estate. And that's what we're trying to all accomplish, right, is to pay less taxes at the end of the day as an investor. So, Bridget, I really appreciate your time today. Thank you so much. You've been a wealth of knowledge and helped me, and I'm sure helped a lot of other people on this call understand what a 1031 exchange a little bit more, what it is. So do you have anything else to add, Bridget, today that you'd like to share with us?
No, I just appreciate the ability to be on this call. It's been wonderful, and I look forward to hearing from any and all of of you. Thank you very much, Spencer.
Hey, thank you. You guys all have a wonderful day. Go make it happen. Have a great day. We'll see you.